Hey, good morning, everybody. And today is Wednesday, Hump Day. And welcome to the Daily Market Report brought to you by Mike Bjork. Uh, got a little bit of economic news scheduled for today. Not much news when it comes to the headline news, so we'll just kind of jump right into it here. So we'll start off today with the retail sales. Previous recording was at 0.3%. We figured it'd be about the same. It actually dropped down to zero. But if you take out excluding the auto, the big ticket items, we were at 0.3% the last time, so we figured it'd be about the same. And actually, only went up 0.1%. So still not too good. Retail sales were pretty much flat, unfortunately. The producer price index, this is the inflationary front, what the wholesalers are paying for, what their index sometimes. So it's not huge, very important, but it's something we definitely want to look at. The reason being is that sometimes their costs go up, but they don't always pass those costs on to the consumer. That's why it doesn't play a huge role, but it's something you have to watch because obviously, if it does, you have to wonder at some point it will raise to the consumer. Obviously, everybody has their thresholds on margins and such. So let's take a look here. We had the previous recording at point 0.2. We figured it would drop a little bit down to 0, and sure enough, it came in at flat. So if you strip out energy and food and energy, we had point 0.4, which was pretty high for the last time. We figured it would drop down to point 0.2, and actually only came down to point 0.1. So again, showing that inflation's tame. Those are all good news for us. Inventories, 0.4%. We figured it would jump up a little bit, and actually it came up at 0.4%. So not a whole lot on the inventories. Where economy showing is flat. Inflation's kind of showing at tame prices so far. So let's go ahead and take a look at the headline news. Stock market's a little mixed today, but it's not trading real heavy. Probably waiting more for, I believe it's tomorrow, CPI will be coming out. That's going to be more important uh, gauge for inflation. The European debt continues to be concerned. There's no news really on that. Just they're still kind of scrambling around to make sure that they're basically feeling like Greece is inevitable. It's going to default and trying to make sure that it doesn't become a domino effect that the rest of the countries aren't going to be suffering as a result of it. So uh, that's the biggest thing right now with Europe. So let's go ahead and take a look, see where bond market is and interest rates are moving. We're up a little bit today. We're up a little bit higher, as we can see with this candle wick here. Technically speaking, because we have these head and shoulders here, where the head was above the shoulders, and we didn't close above there. We should be technically dropping here, but because of the information we had received today, that our economic news releases, it doesn't seem like it will. Uh, but looks like could be building some with the sideways movement where we could go either up or down rather quickly. My feeling is we'll have some bad economic news releases and actually go upwards. So that means interest rates will improve. So right now, I would simply say, depending on when lenders come out with the pricing, interest rates will be the same or better than interest rates were yesterday. Okay. Hope you folks have a great day. Again, if you guys are looking to buy or refinance, stop by my website, CaliforniaMortgageTips.com. Take a look at the free reports. Take a look at the education. If you're a first-time homebuyer, it could provide you some great information there. Again, CaliforniaMortgageTips.com. Take a look. Have a great day. See you tomorrow.